Hi all. In this next section, we're going to meet the tax returns, so the self-assessment, the SA100, and the partnership return, the SA800. There'll be a separate video on the corporation tax return, the CT600, and guidance on allowable expenses to reduce your corporation tax liability. So starting with the self-assessment, the SA100, to complete a UK self-assessment tax return, you must register with Revenue and Customs, HMRC. You must track key seasonal deadlines, gather your relevant financial records, usually these days in the spring, as self-assessment and partnership have a deemed 5th of April year end. So usually pull the records together in the spring and submit your return online. Self-assessment is a system HMRC uses to collect income tax, and it makes estimated payments on account, which estimate the tax liability based on the previous year's tax liability. So you will face payments on account, typically on 31st January in the tax year and 31st July after the tax year. So it's important to understand the key deadlines. Deadlines depend on the tax year you're filing for and your chosen submission method. So 5th of October 26 is the deadline to register for self-assessment for the 25-26 tax year. So that's the year we're doing at the moment. 31st October 26 is the deadline for submission of 25-26 non-electronic paper returns. They're pretty rare these days. Electronic returns very convenient. 30th December 26 is the deadline to submit your tax return online to be able to pay your outstanding tax bill through your PAYE tax code if you qualify. And 31st January 2027 is the online deadline to file your 25-26 tax return and pay your final balancing payment. And 31st July 2027 is the deadline for the second payment of account towards the following tax year, the 26-27 tax year. So first you register for self-assessment. You must register if you have untaxed income over £1,000, such as from self-employment, property rental or capital gains. Capital gains, particularly on residential houses, are dealt with through a separate system, a capital gains tax account. So you go to the gov.uk self-assessment portal, you sign in or create a government gateway account, you fill in your personal details and national insurance number, and you wait up to 21 days for HMRC to send your 10-digit unique taxpayer reference, your UTR. So now you gather your income. Having done all that, you gather your income records before logging in to file. Collect all paperwork reflecting income earned between 6th of April and 5th of April of the relevant tax year and the expenses you mean to claim set against it. P60 and P45 forms if you have salaried employment. Invoices and receipts detailing business income and expenses, particularly important if you're VAT registered, which is another video. Bank statements highlighting interest received, and property statements dealing rental income and upkeep costs. And third, file and pay your bill. Once you have your UTR, you can log in and submit your figures. Navigate to the gov.uk online tax return service, fill in the tailored sections that apply to your income income types, and review HMRC's automatic calculation of your tax liability. Submit the return and pay via the gov.uk pay bill tool utilising bank transfer, direct debit or debit card, which is reasonably straightforward. The trick there is to add a K to the end of your UTR if you're sending in a payment by post to HMRC Direct, which is pretty painless and reliable. So we go now to the partnership return, the SA800. The SA800 is the official HMRC partnership tax return form used to declare a partnership's total income, allowable business expenses, and the precise allocation of profit and losses among its members. While the partnership files the SA800 return, each partner must also report their share of profits or losses on their individual self-assessment return using supplementary SA100 pages. The partnership itself does not pay income tax directly through this form. Core filing deadlines. Deadlines for the SA800 follow the standard UK tax calendar. 31st October is the absolute deadline if you choose to submit a physical paper return by post. 31st January is the deadline if you submit the return online. Late penalties. Miss that date and HMRC charges a £100 penalty to every partner individually, not once to the partnership. So, for example, a 4-partner firm faces an immediate £400 cumulative fine if the partnership's SA800 is not submitted on time. So key sections and the supplementary pages. The primary SA800 form covers basic trading and professional income alongside interest from banks. Depending on how your firm makes its money, you may need to attach specific supplementary pages. Key supplementary pages include the SA800 PS for non-trading income, SA801 for UK property, SA802 for foreign income, SA803 for capital gains, and SA804 for savings and investments. How to file the SA800 online. Unlike individual returns, HMRC does not provide free software for submitting an SA800 online, and the free software that HMRC did provide has been withdrawn because there were some difficulties getting that to coordinate with identification and so on. You need to appoint a nominated partner. One partner handles registration and filing, and use of commercial software. You or your agent must use HMRC recognised third-party software. Gather details, collect UTR numbers and details for all partners. Report finances, enter income and expenses, and allocate profits based on the partnership agreement. Finalise statements. Use the software to produce statements to be included in each partner's personal tax return. So that summarises the SA100 and SA800. Now let's turn to the limited companies and the CT600. The CT600 is the official HMRC corporation tax return form that active UK limited companies must use to report their income, profits, allowances, and calculated corporation tax liabilities. You must file a company tax return if you get a notice to deliver a company tax return from HMRC, even if your company has made a financial loss or has zero tax to pay. You must still complete and submit this return to remain compliant. So the critical deadlines, unlike standard self-assessment or partnership deadlines, corporation tax has two distinct deadlines determined strictly by your company's unique accounting period. 9 months and 1 day. This is the statutory deadline to pay your corporation tax bill or report that you have no tax to pay. 12 months is the final statutory deadline to file your CT600 return online with HMRC. Again, late penalties, don't forget those. Failing to file your CT600 on time triggers an immediate automatic £100 penalty, which increases to £200 if you file more than 3 months late. Key requirements for filing: when preparing your CT submission, you cannot file the form in isolation. You must submit a comprehensive multi-part digital package. Form CT600 is the primary document outlining your company's income, capital gains and tax calculation. You also attach company accounts, full balanced annual financial statements, including a balance sheet and a profit and loss account. And tax computations, a detailed breakdown showing exactly how your accounting profit figures were adjusted to calculate your taxable profit. IXBRL format. You must use software that can provide these accounts and computations in IXBRL format, that is with tags, so that HMRC recognize all the individual accounts. Because accounting software is pretty automatic, this is painless, and many people are unaware that it's actually done by their agents or accountants. So the step-by-step filing sequence: most small, straightforward limited companies can file their accounts in CT600 simultaneously using a shared government portal. So you set up the government gateway, accessing your company's online account using your corporate credentials and 10-digit UTR, unique taxpayer reference. You can use HMRC's joint service, utilise the gov.uk sign-in page to file your accounts together with Companies House and HMRC at the same time. Or you can opt for a commercial software if your company handles complex finances or invests in, it's worth the investment in a commercial accounting platform, which is very easy to use and connected to the bank account, is a real asset both in filing returns and also, let's not forget, actually managing the business and managing the health of the company, and ensuring the sales are happening and the expenses are controlled. Then it remains to settle the tax bill, make a digital payment via the gov.uk Pay Corporation Tax tool using electronic bank transfer or a corporate debit card. So we've got time to just gallop through the allowable business expenses. To reduce your corporation tax liability, your limited company can deduct expenses that are incurred wholly and exclusively for the purpose of running your business. It's a tougher test for individuals. That's wholly, exclusively, and necessarily for your business. Every pound of valid business expense reduces your taxable net profit, which directly lowers your final tax bill, so well worth considering. The core rule of wholly and exclusively, HMRC dictates a cost must serve 100% business-related purpose to be fully deductible. The dual purpose trap: expenses with a dual purpose, such as personal use, are not permissible. Apportionment: if an expense has mixed use, like your home internet or mobile phone contract, you can only claim the calculated business percentage. And a business bank account. you must make all payments for business expenses via your business account. That's really quite important. And there's really no point presenting your accountant with a mass of personal transactions. That's just going to cost money. So a dedicated business account is vital for a smooth administration of expenses in particular. So major categories of allowable expenses: salaries and staff costs, obviously. Directors' salaries, employee wages, employer national insurance, NICs, and pension contributions. Salaries must be reasonable for the work performed. Travel and subsistence, public transport, business hotels, and business mileage at fixed HMRC approved rates, e.g. 45p per mile for cars up to £10,000, some recent change to that. Regular daily commuting between your home and a permanent workplace is strictly non-allowable. Office and overheads, office rent, business rates, utilities, phone lines, web hosting and software subscriptions. If working from home, you must use flat rate simplified expenses or a strict pro rata utility calculation. Marketing and training, advertising costs, PR, website builds and work-related courses designed to upgrade skills used in your current trading activities. Training for an entirely new skill or a different career path is usually disqualified. Professional fees, legal fees for trade contracts, accountancy fees and mandatory business insurance, e.g. professional indemnity. So legal expenses linked to capital structures like buying a building are not allowable. So the strict non-allowable exceptions, even if paid directly from your business bank account, these common items are barred from lowering your corporation tax. Client entertainment, income and corporation tax rules mean businesses are blocked from claiming a deduction for their profits for entertainment costs. You cannot claim tax relief on taking clients to dinner or events, sporting events. Staff entertainment exception, you can claim relief on staff events like a Christmas party up to £150 per head annually, so that's quite a decent allowance. Fines and penalties, any driving fines, late filing penalties or legal penalties cannot be used to reduce corporate profits. Finally, capital allowances versus expenses. If you buy high value items that you keep to use in your business for over a year, such as laptops, machinery or company vehicles, you cannot write them off as standard day-to-day expense. Instead, you must claim through capital allowances via the annual investment allowance, which still allows you to offset up to 100% of the asset cost against profits in the first year. Well, that's a very quick gallop through. I hope that's helpful, and see you next time.